Hi guys, good day from wherever you are. All right, I have another back test to do, and the purpose of this back test, you all would already know by now, is to figure out the conditions in which market move and why they move and what makes them move. So when you get this thing noted out, you get to know where to expect market to move in the future, or rather in the current week where you're trading, right? So you know the things you have to look out for, you know the edge you have to look out for. All right. So let's go. So this is step 200 index. Um, Now we are back testing for last week. This week hasn't have not yet played out well. I don't know why my tongue is twisted. But yeah, this week have not yet played out well. But let's go through what happened last week. Okay, so usually what you do is you first of all go from the daily time frame. You analyze it by marking out your area of resistance and support, or supply and demand, right? Now I already marked down this one, so I had to clear my chart, but I marked down this one. So you can see this is an area of supply and demand where we had price below this area, had a 2 days interval, 2 days, what do you call it? Um, Retesting on this area as a resistance, and later break off, came back again to use it as a support. Okay, so this is a good point. Let's see if there's another one. Um, should I pick this? Usually, if this is very difficult for you, what you do is just switch to line chart so you can see clearly. See where I just put this in? You see? So you can always switch to your line chart, so it's going to be easier for you to see. Okay, so this is this. Yeah. I don't know if the place is down, but let's leave it at that first for now. Okay, so what you do, you mark out wherever prices. Remember, we're not looking at this week. We're assuming this week is we're kind of running a replay. Okay, so we're assuming this week is not visible yet. We are somewhere around here. Okay, so that's what we're doing. So um, we're marking our price below the support and resistance areas below and above as well. So this, I could also say this somewhere here. Yeah, somewhere here, but let me just put a line there. I'll box it in later. Yeah, somewhere here. Okay. Or you can even bring it down. I think this is more better, sort of. Well, yeah. So let me box in the ones that I'm sure that are like there. Yeah. So sorry, I have a bit of cold. I'm clearing my throats. Okay. All right. So, okay, you see, this is why you change it to line chart, because then you now see the interactions better off after you move to the candlestick viewing pattern. And this is actually also interfering with this. This is somewhere here. It's good. It's a point. And who knows, market might still come down here before taking off, but we are waiting. There's a fair value gap somewhere around here. There's an imbalance somewhere around here. So we're waiting. And every confluence that you can get is good. One of my mentors told me one time when I was um, learning, yeah, he said that the more confluence you have, the better the the trade is going to play out. The better the trade is going to play out. So, all right. So I've drawn all what I need to draw now. Now, what do we look out for? Now, the trend. We've done the support and resistance. The trend now, what we do is the last time market broke out from this high area, you could either use this as your break. Yeah, you can use this as your break because market is already in an uptrend, sort of. Yeah, you can use this as your break or you can use this one. Either one is fine, okay? Either one is fine. So now when market breakout, what you're expecting is retest. Retest comes in places like where you have your order block, like here. This is a daily order block. Here, I'll put it daily. Do you want map it out? Like here we have a little, I think I should zoom in, man. Yeah, it's just a little fair value gap. Yeah. So remember, I'm using the pink color for the fair value gap and the green for the order block. Okay, so this is also D1 order block. Yeah, this daily order block, daily fair value gap rather. I'm going to move it closer. Yeah, so you see where exactly it is. This other block is not that. Okay, it's cool. Let's leave it. Now, what else do we see? We see another fair value gap here. Another fair value gap here. I don't know if you can see it, but it's between this and this. Okay. If you want to know more about fair value gaps, I think there are videos online where you can learn that, but then I could still do you a favor. I'll post a video about it. Just let me know if you want to know more about fair value gaps. I'll post a video on fair value gap and imbalance in my what do you call it? In my Instagram page. Okay. So do well to check it out. It's Josh FX Pro or Josh _FX Pro. Yeah. So this is D1. Yep. All right. So now we've set all this. At this moment, price is somewhere around here. So we've set all this to wait for where price will come down to retest or to give us an entry. The reason why this is going to stand out more is because there is a support resistance zone there or a supplied demand zone there. Around here, it has broken and it's going to probably want to come back to use it as a floor or as a support to jump back up or to start pushing back up, okay? So this is why it's also important to note that wherever you see fair value gaps or order block in the same area as your supply demand zone is likely going to hold because of the strength of that area. Okay, and this is a daily time frame. So when you get supply and demand zones like this on daily time frame, they are likely going to hold more than when you get it on a lower time frame. Okay, so let's now break it down to the 4-hour time frame and see what happens. All right, 4-hour time frame. Remember our rule. Oh, damn it. Okay, I think I need to copy it out and paste it here. Copy. Um, Paste. Yep. All right. So remember the rule. The rule says what we're expecting is 2 to 3 rejection candle confirmations rather. Rejection confirmations. It could be candle rejections. It could be candlestick pattern rejection. It could be candles weak rejection. Okay, so understand that it could be a structure and it can also be a it could be a structural rejection, and it can also be a candle rejection, normal candlestick rejection. Okay, so but regardless, then we also have trend correction moves when you have markets retracing back to that point. Is it retracing back as a trend or is it retracing back as just a quick like this kind of situation? Let me put my pointer on this kind of situation here, right? Is it retracing back as this? Just go straight to that place, retrace and start jumping back, or is it retracing as a trend? Is it trending to the area of retracement? Okay, so that's what I mean. So you'd have to, there are 3 laws or 3 rules to the retracement. If it first breaks when it breaks the first break of structure point, which is what I mean by first break of structure point. I'm talking about the initial, after the retracement, after you've gotten your okay, one of the things I didn't add here is I'm doing more explanation now because for the sake of those people who were not here, who didn't see my last videos, okay? So, but do well to go check out my last videos so you'd understand fully what we're doing here. Okay, so one of the things I missed here is to map out my trading range. Do not forget, you can even write these things down as your checklist. You see that some of the things I've mentioned are not in this checklist, like trading range, like zones, support and resistance, supply and demand zones, like trending market. What trend is the market? Has it broken structure? So these are all the checklists, but I just put this one. This is as per entry strategy. So this is more like my go-to entry confirmations, right? Checklist. So it's not like the full checklist. So that's just so you know. So at this point, we'll map out our range. Our range is from here, from this point, yeah, from here, this line to this point is our range. Okay, so that's the full range because this was the low, and after it broke, this was the high created before the retracement would start coming down. Okay, so now when we go down to 4 hours, what we're expecting to see, let me zoom this, sorry. When we go down to 4 hours, what we're expecting to see is now at this 4 hours range now, what do we see? First of all, this rule says when it breaks the first break of structure point, then goes straight to the fair value gap without trending there. Then when you see your first rejection candlestick pattern, you can take the trade and continue upward or continue back in the trend. So now the second rule is when it retests on a low or a high after it has finished breaking the first what do you call it, um, break of structure point, then it now goes straight to your fair value gap or order block zone. Then on your first, same rule applies to the first one. On your first rejection candlestick pattern, you take the trade, okay? This can also happen. The market can also trend there and then give you it can also trend there and give you a rejection candlestick pattern and leave that place. So it all depends on how you see it. For me, what I would say is when it trends to that location where you have your fair value gap and then give you a rejection candlestick like the stars, like the morning star, evening star, I would love for you to go down to a lower time frame rather, and check if it broke a structure with that pattern. If it breaks a structure to the opposite direction, going back to the trend, then it's a safe trade. You can take it. But if it didn't break a structure, you have to still pause for a while. So the third one is when it trends to the structure, when it has a trending structure to the OB or the FVG zone, wait for a break of structure to trade to your traded direction, okay? Or to traded direction. However, so but I hope you understand that. If you have questions, you can ask me, drop a comment, and I'll reply your comments. I always check my comments. So if you have any question, drop your comment. All right. So at this point, we are in 4 hours time frame. Market has this was the range. This was the range here. So yeah, this was the range, the high and the lowest point from a daily perspective. And this was where the break of structure actually happened on the daily. On the daily, I used the body of the candle to indicate the break, right? When a body closes above the high body, the high point body, then it's a change of direction for me. But you can still use your wick however you want to use it. I just use that as my own confirmation. Okay, so yeah, so this in this case now, market after it touched this place, this was the first low that it created, right? And broke it. You can also call this the first low while going there, the last low while going there to the high. So it kept trending. This was the trend. It kept trending there. It went from here, trended, came here, came back here, came here, came back here, came here, came back here. So this is clearly a trend going back to your interest point, your uh, what do you call it, your point of interest or your area of interest, however you call it. All right. So this is clearly a trend. So the third rule says you have to wait for a break of structure before you enter, even if you just touched here and it didn't break structure. That's You're not waiting to see a candlestick pattern that will take it back there. Just wait until you have a clear break of structure pattern that will take you back there, right? So you can trade it. And at this point on 4 hours, we also have to look out for our areas of interest, which is probably around the same zone as probably around the same zone as our daily areas of interest. And we can see one here. This is still a support and resistance zone, if you remember. We talked about this. This is still a support and resistance zone, the main zone, that we had from daily time frame. Yeah, so now we had that, and we have our before market, the last this let me put this here. So the last high, the last order block or point of interest before market broke this high was this. This is the closest one here. And this is the next one here. This order block, this order block here. If you notice also, there's literally no fair value gap around this area. So, but the closest fair value gap that we had is this one. But if you put a fair value gap here, this push that ran into it would have taken out this fair value gap. So it has invalidated it. So what you would do is to look out for the order block setup. The order block setup. This is the order block setup here. I hope I can see this thing. God help me. I hope I can see this thing well. Sorry, it's pink. I'll change it to green. That's my order block color. Okay, so, and I'll name it 4 hours. This is 4 hours time frame. All right, so you see, so now we have taken note of our order block area, still within the same zone as your daily fair value gap, and it's still within the same zone as your trend, as your zone, as your what do you call it, support and resistance zone. Okay, so market trended down to this point and then gave us a sweet engulfing candle which broke above this point, and that is the break of structure you are waiting for, right? So you could trade this, you could take this trade. You see how far this thing went. You could take this trade from here, if you wanted to take from a 4 hours time frame. Put your stop loss just below the zone, the low of that engulfing candle. Okay, put your stop loss below the low. It's still below your zone anyways, so you could take it, apply your risk management, and this thing gave you a total of 1:4.7, if I'm not mistaken. Yeah, 4.7. So, but then there's another catch. You can still go down to a lower time frame. Now, going down to a lower time frame, what just happened now? This place looks okay. It's good. Going down to a lower time frame, you're looking for trade after this point. After this point, right? Because if you're to look for, let's see if we can see trade here on a lower time frame that is like a break of structure, right? Because it trended there. So let's see if we can see something here. What do we see? Where's it? Okay, yeah, this is it. Oh yeah. Okay, see what I was saying? So this is a trend. This is a proper freaking trend. Yeah, this is a proper freaking trend to that place. So there is no break of structure. A lot of people can risk here, but I wouldn't, because this is still a downtrend. It's still in a downtrend move. So the only time I would take this trade is after I see this break of structure here, right? Market cleared all this zone with this move. Then the next one that I would now be looking at is looking at this particular zone here. Where is it? Okay, yeah. This particular one. No, aftermarket has cleared this. Let me show you the clear. This is, I will use this one though. This is where market broke the last high. The reason why I'm using this one is because this is the last high that took out the last low before you had this present low that came here to tap on the zone. Do you get? So this was actually the last high. And if you look further down, you would see that there's 1 hour has its own order block here. This red pin hammer candle, right? 1 hour had its own order block here, which if you follow that line, it actually tapped on it and left. Okay, it actually tapped on it and left. There were a series of rejections there. Market did this 2 to 3 rejection there. Okay, so but I would not take this trade. Honestly, I am telling you, I will not take this trade here. But this is where I would have taken the trade. After I've seen this push break out from here, it broke out from here, it broke out from here as well. So after I've seen this push break out from here, I would wait for market to come back to this little order block here on 1 hour. This little order block, because now it's confirmed, right? Now I've confirmed the movement. On 4 hours is bullish. So there's no point. In fact, once you've seen this 4 hours bullish move, the next thing for you to do, you can set a pending order here when you see something like this. You can put a pending order here or anywhere here, right? So just be rest assured that this thing is going to play out because 4 hours has given you the direction. 4 hours is now bullish. It's time to go. You're just waiting for 1 hour confirmation. So if you look at 1 hour very well, you see these 2 to 3 rejection confirmations. Now, like I said earlier, it could be a candlestick rejection. You see how this candle tapped on the order block left? This one tapped on the middle order block zone. It didn't invalidate it because once it invalidates this point, I'm not interested anymore to buy it until I see another structure. Maybe it comes down to this order block down here. Or maybe it finally takes this little fair value gap that is here. Then fine. Okay, so but it didn't invalidate it. This one still came rejected. So we have a complete 2 rejection. The next buy candle now that closed above all this place confirmed your break of structure that you're waiting for. This break of structure that you're waiting for. This one. It confirmed this break of structure here. Yes. So you see? So once you've confirmed this, I would have, if I've seen this candle, this 2 here close, this 2 rejection close, on the start of this one, I would have actually taken it, put my stop below here. This would have been how my trade would have been here. Like this. Yes, this is how my trade would have been. This is how my stop loss range would have been. Or if I wanted more confirmation, just to be on the safe side, I would have just taken it after this bullish engulfing candle, then put my stop just here at this middle or just a little bit below it. It will still come and give you your 1:2, 1:3, however your appetite is, or whatever your target is. It will still come and give you all this move here. Okay, so but yeah, this is the trade that you would have taken or last week that would have given you. So you see what I did? The entire week, after you see a good short trade, I don't trade every day, like every day look for trade. No, what I do is I look for opportunities, and in that particular pair, if I see an opportunity for that week, whether it's on Monday or Tuesday or Wednesday or Thursday, I just take that trade. So I'm more of like a swing trader and also a day trader kind of thing, right? So, but in this case, this would have given you a sweet 1:6 if you are taking this trade. I always say this, if you want to take a higher risk, if you want to leave your TP open, your take profit open, make sure you keep moving your stop loss. Move your stop loss at intervals. Don't just move it to break even first wait until you see like a rejection first. The first rejection and break of structure. It rejected, it came back, retraced, like the first retracement, then break of structure. You move your stop loss to this point. You see the second retracement and break of structure, you move your stop loss up. So just keep moving your stop loss. When you see something like this, move your stop loss above here after it has broken this structure. Move your stop loss just below this point here, right? Then like that, just keep doing that, and that's how you follow up to maximize all the your entries and all your trade, all the profits, to take everything. And another thing there is you can also do what we call um scaling in. Yeah, you can also scale in on your trade. Scaling simply means to add winning trade, to add more trades to your winning trade. It's like after you've seen a break of structure like this, you add after you've seen a break of structure, like market retrace, come back, you add more trades and put your stop loss above. Okay. You add more trade. When you see this break of structure, you add more trade, put your stop loss above. This, add more trade, put your stop loss below. Like that. Add more trade, put your stop loss below. Like that. Just to keep to maximize your, you can get a 1:, maybe your plan was to get a 1:3. In doing this, you could get 1:7, 1:8, just in that same little space of your 1:3. All right. So, but this is backtest for step index 200. And I hope if you don't get anything right, you can always go back to watch the videos. And I hope this blessed you. And thank you. I'll see you in the next video. Do well to subscribe, like, drop a comment. I would love to read your comments. If you think this is useful stuff, let me know. It will really encourage me to do more. Okay. Then like and share. You can share to friends, share the page. Let's make this money. Okay. All right. See you guys on our next video. Thank you very much for